Yeah, especially in today's trading day when there was a rebound and once again we've slipped, Manav. Thank you for joining us. Tell us the first chart that you have for us on Nifty. You're suggesting that in the near term now that bottom has been made and you are expecting the index to move to levels of about 12,400 or to even 12,800 levels.
Yes, absolutely. In fact, since quite some time markets are in a very strong uptrend, and in a structural uptrend it's important to identify the important intermediate lows. So my first chart is talking about the historical data of the seasonality of the market index. So it's important to also understand the timing of the markets. One is a price study and one is the time study. So historically, whenever we've seen the price study, we have this data of from the June lows to July highs are the key parameters I've considered for past 18 years of Nifty index.
Wow.
Okay, so when we are looking at this data, it's basically we are considering the June lows and July highs are the key parameters, and the percentage change, if you can see, average it has given 11.6% returns in past 18 years. The market structure has changed in past so many years, and if you also consider only the past 5 years of data, we've not seen all along bull rally, but if we consider the past 5 years data, that also provides us an average of 8.5%. So looking at this data, it gives us clear indication that July is a good trending month for the markets, and historically usually markets have bottomed out in the third week of June. So we are right now in the third week of June, and not every time any trader would be able to buy the markets at the lows. So this data is from the lows to highs, but if we consider also the June closing average to July highs, it gives us an average of 8.5%, so which is also a very good average to get into and position yourself for the long markets. In last 5 years, the other data when I had back tested, in last 5 years, July's month has exceeded June highs and also has closed above it. So in short, this all time analysis is hinting for a June month to probably enter long positions and look for a trending month for the month of July.
All-time high on Nifty that would be then, because
Absolutely.
I think highs were somewhere about 12,100.
Yes.
Just one query I have on the chart. You've plotted the lows and the highs of the month of June to July of from 2000 to 2018, and you're saying in these months an average return that we've seen in these months is about 11%.
Yes, 11.5.
And that's for the month of July or June?
This is taking from the June lows to July highs, and the percentage differences here.
Okay.
So we have the time analysis which has confirmed that June is a month to enter. The next chart that I would like to highlight is the price. So now we need to understand how is the market poised in terms of the Nifty index. So on the top we can see is the price chart, and the lower band is a stochastic indicator. So in an uptrend you usually would want to identify the intermediate low. So if I take the chart from the start, taking it from October 2018, so whenever there has been a buy in the stochastic indicator from the oversold levels, if you can see, the prices have from there. So the prices have often seen prices have often seen a 4.5% move from its lows and has exceeded its recent swing highs. If you can summarize this, so this is the low that was formed, and it managed and exceeded its recent swing high, and again a low from here, and again if there is a buy. So we can see there has always been whenever there has been a crossover, there has been a 4.5% average returns in 15 sessions for the markets. And currently we have seen a corrective decline in the markets recently from its all-time highs. We are still in a rising up channel, and we have again received a bullish crossover in the stochastic indicator. So looking at the time and the price, when both these quotient are coming together, it's suggesting a very high probable event for the markets that this is a short-term bottom in place. So the recent lows that the market made on last Thursday of 11,625 is definitely suggesting that it's a very high risk-reward ratio entry at the current levels. And looking at the price structure at the channel, this also provides us the first target of 12,400 and eventual 12,800.
So 12,400 is the target for the month of July?
Yes, 12,400. So looking at the entire data, even on the price chart, so we've seen this 15 sessions of aggressive rally, and usually such patterns are also achieved in the 4th week of July. So next 20 trading sessions would be very important and trading for the markets on the bullish side, and we have seen an average returns of 5% to an average of 11%. So this is the bandwidth that you have to expect on the upside.
So today is the opportune time to create longs?
Absolutely, because your risk reward is quite limited. We are at 11,740 and the last low was at 11,625.
So we've bottomed out with the correction that we've seen in the past, and what
Yes.
everybody was talking, index is consolidating. That
Correct.
phase has also come to an end.
Yes, absolutely. In fact, from last 1.5 years, if you see, markets are in a broader corrective phase, and for it to throttle on the upside, you have to actually break this channel on the upside. Then you would get into a structural bull market. We are still in a rising up market, but we have seen swings, up moves and down moves. But once we break above 12,400, that would provide the additional throttle for the markets going forward. And since the price and the time, both questions are coming together, I think we could probably see 12,800 if the momentum is
And that's
sustained.
the target for which month?
July itself.
July itself?
Yes.
Okay. Okay, so that's about Nifty. According to Manav, we've already bottomed out, and he expects the month of July to be good for the markets. In fact, his first target is about 12,400. But Manav, what about which index are you tracking?
Yes, so I'm very closely looking at the infra index. In fact, this has been one of the sectors which has been underperformer since quite some time. And if we are looking this sector recently, I've drawn a trend line from the lows of 2013. And there was another low which was connected at 2015, and recently around we've seen a test of the recent low. So basically, this validates the long-term support line. And we have also witnessed that there has been a lot of sectoral changes which happened in the markets. From 2018, we've seen the auto sector come down, underperformance by the pharma, and a lot of consumption sectors have also come down. But this is one sector, if you can see, it has started actually moving higher. It has formed a very strong morning star pattern on the monthly chart, and usually this formation indicates a good bottom in place, and it's very difficult to negate this kind of a pattern. And this becomes a very strong support. The components of this sector has a heavy weightage in stocks like Larsen, Siemens, and we've already seen that run up coming into this sector. I think this is still in an early stage of the next bull run. This story is for at least next 2 or 3 years. I sense if we see a breakout above 3,100, which is very likely, this sector has an upside of at least 40%. The how we derive the target is we take the width of the pattern and then we project it from here on.
Sure.
So that gives us an upside target of 40%. So going forward, I think the new theme and the new sector that one should keep eyeing is the infra space. I think Larsen is definitely going to be the top pick from this sector. And power as a space from last 10 years has been an underperforming. So Tata Power is also a crucial component in this sector, and it is still trying to consolidate and kind of make a base. So eventually I think that is an unexplored space, and a good accumulation has been witnessed.
So to play this theme, you're choosing L&T and Tata Power, right?
Yes.
Okay, fair enough. So L&T, Tata Power and Nifty are your calls from Manav. Neeraj, over to you.
Well, let's watch out for these names. Navneet, Manav, thank you so much for bringing us those perspectives. And it's always good to do some medium-term chart looking while we're talking about the here and now. So we mix the here and now with what could happen over the short to medium term. We'll, of course, ask Manav about what his near-term call is as well. He might have this medium-term call, or rather a short-term call on what the index could do in the month of July. But today the markets are looking slightly skittish. It'll be important to get a perspective on that as well. So actually, let's kickstart that conversation now. Last 1 hour of trade left. Kshitij Gandhi of SMC Global Securities with us on the show, and then of course we'll get in Manav's view on the near term too. Kshitij, good having you. Thanks so much for joining in. Let's talk about the here and now, the short term. 98 points off for the Nifty 50, though banks are not cracking as much. Is that an indication that this fall may be short-lived? What would you advise your clients to do if they want to do a trade from a next 1-2 day perspective?
Rightly mentioned, in yesterday's session we have seen bulls are making their comeback to the markets after the markets have been beaten down from its recent all-time highs, say from 12,100 levels. One point I want to add on a technical basis that the rally we have seen in the Nifty from 11,100 to 12,100 levels, approximately 1,000 points. So on a technical charts, on a daily parameters, I believe this is a 500 point downfall we have seen from 12,100 to 11,600, which can be considered as a hefty, healthy profit booking or a healthy correction. So this is once again a good sign for the Nifty for moving forward. And as of now, on a shorter time frame, I believe 11,600 mark, that is a very, very crucial support levels for the Nifty moving forward. As on a technical parameters, the Nifty has made a double bottom around 11,620 levels in yesterday's session, and from there on, once again we have seen bounce back towards 11,800 levels in yesterday's session once again. And from the derivative front as well, I had observed that we we have seen a marginal put writing coming into the 11,700 and 11,600 put strike, which once again point towards the more upside into the prices moving forward. So as of now, yes, we have seen some kind of a retracement after yesterday's rally in today's market. Nifty is almost trading down by nearly 100 points. But I believe in coming week, once again, bulls will make a comeback into the market, and on a technical on the technical levels, move above 11,800 levers will once again push the market towards 11,950, 11,930 levels in coming week. So I will be a bullish in coming week for overall market.
Okay, so essentially, Kshitij believes you can buy the index right now as well. Manav has been bullish. Manav, just a follow-up to that then. Would buying any kind of options be a good idea?
Yes, in fact.
And what strikes, what dates?
Yes, see, looking at the current scenario, we can create multiple strategies. The first thing is that we have recommended our clients to buy July 12,000 calls, and we expect a good upside that, looking at increase in volatility, will not be surprised to see a double up. For option sellers, selling 12,500 put is another strategy, because we expect that to be, expire worthless. And for a conservative trader, we are recommending to buy 11,900 calls and selling 12,500 calls. So that is a spread which we have also initiated. So these are the kind of spreads that you can take a view, but the overall scenario is that yes, there is a high probability we are bottoming out, and this opportunity on the decline should ideally be looked into for buying at the lower levels.
So by the July month, 12,000 call options.
Yes.
At the current prices.
Yes.
Okay. So, well, that's an index strategy. Now let's talk about specific stocks. Kshitij, I'd like to come to you first. In light of this bullish view that you have for the index, what are the stocks that you're recommending?
All right, like we have seen from last 3 to 4 sessions, especially mid caps have been hammered down very badly, but I believe the index have been holding out with higher levels just because of the support from the banking stocks, especially from the private banks and PSU banks both, and the frontliners can outperform in the coming week as well. So from a positional basis, say from 3 to 4 trading sessions, I have a banking stocks onto my radar for a buy call. So first of all, I would like to go long with a private bank, that is ICICI Bank. Currently stock is trading around 430 odd levels. I believe the momentum into the ICICI Bank can carry over towards 453, 455 levels in coming week. So as a positional trader, I would like to take a long position in ICICI Bank, keeping a stop loss just below 420 levels from here on. Take a long position for an upside potential of 453 to 455. The second call would be again from a banking counter, and this time it would be from a PSU bank. The SBI would be my next buy call. Currently stock is trading around 349 levels. So from here on, take a long position, keep a stop loss just below 338 levels for a positional trade, and for upside target of 361 to 362 levels. The last stock would be again for a buy call, and that is a Voltas that's coming onto my radar. The currently stock is trading around 620 level, and in last 30 minutes we have seen a sharp recovery into the prices, and a long build-up has also been noticed from derivative point of view. So I believe the momentum play can be taken into Voltas as well. Keep a stop loss just below 610 levels for upside potential of 640 to 642.
Okay. Manav, what about your stock ideas? You incidentally also have a State Bank of India within your list.
Yes. So I also looking at this chart, of SBI, it has really played out very well recently and has been forming a series of higher bottoms. The overall structure for this stock has been bullish, and I sense if the large cap has to play out on the Nifty 50, SBI would definitely be one of the leaders, as it has also breached its 10-year channel formation. So for the near-term perspective, 335 is the stop loss for SBI. We expect an upside target of 390. My other pick would be a buy on Ultratech Cement. The prices after a recent decline has seen a good bounce from its oversold levels, and this recent decline was more or less corrective in nature. So we expect the stock to test its recent swing highs, and overall the risk reward ratio is quite favorable. Recommend a buy into this, a stop of 4,500 for an upside target of 4,950.
Very interestingly, people are sticking to large cap names a lot and not so much in the mid cap space, maybe with reason too. Let's get in a fundamental voice on the show. Jagannathan Thunuguntala of Centrum Broking with us as well. Jagannathan, good having you. Thanks much for joining in. Just straight off the bat, Jagannathan, a lot of voices have been positive on the corporate facing banks, and while hitherto conversations have centered fundamentally around an ICICI Bank, Axis Bank, to an extent maybe even an IndusInd, now SBI is coming firmly in focus. There's talk of recapitalization, and if the economy shows some bit of pickup, it might do well too. would SBI or the likes fall within your list of candidates that you would be sanguine about?
By now, it is quite evident that markets polarized behavior that we had witnessed over the last 7-8 months by concentrating the entire bulk of the rallies in the 10-15 stocks. I think that is playing out, and most of the market voices and analysts are going through recency bias, meaning thereby whatever happens in the recent times naturally will impact your psyche and thought process a lot more than what happened with the long time gap back. So I think most of the market is going through that. I think where action is happening, let's say ICICI Bank, Axis Bank, SBI, where naturally people are betting in there. But just that the juice, the bulk of the juice, there was easy money was taken. Having said that, upsides may be coming on all these stocks, but I think you will make money if you can patiently wait for those eventual dips, and then you can use those dips to buy. I think the entry price becomes extremely important if you have to see meaningful returns on your portfolios. Meaning thereby we are very positive on all the names that you said, just that your buying price has to be good. As far as IndusInd Bank is concerned, I think probably analysts and the markets will wait for the upcoming result season, wherein they want to hear how much is the real stress book exposure they have, meaning thereby how much provisions they have created. Meaning thereby, I think IndusInd Bank will there be little bit still questions in terms of the sustainability of the rally or the momentum. But as far as ICICI Bank, Axis Bank and SBI is appearing to be a clear trade, but having said that, it is getting a crowded trade.
Okay. Jagannathan, what would the verdict be when it comes to autos? Today under pressure as well, there are brokerage downgrades that have come in. Don't quite know if GST council meeting will result in anything substantial when you have the largest automaker saying that there is no need for a GST cut, let that money be used to improve infrastructure. So that near-term tailwind might not be there as well. Would you use these weak spots as opportunities to buy into some of the high-quality auto names, or would you believe that there is some more downside possible? Maruti, for example.
Yeah, while the storied for example, while the storied concept of Maruti with a clear leadership of about 51% market share, we haven't witnessed that kind of market share by any market leader anywhere in the world. I think we are large country with large auto demand, and then having 51% market share is extraordinary story by any standards. Having said all that, the stock is still trading at 25 times FY21 multiple. Make no mistake, it's not. I'm not even talking about FY20. I'm talking about FY21 estimated earnings. We are talking about 25 times multiple. A company which is facing a 20% degrowth in its volumes and clear slowdown in sales as well as margins, expecting 25 times multiple on 2-year forward is a little bit a stretch. Keeping that into account, nobody is taking away the leadership or the kind of story that Maruti has created. Just that we should be mindful of the fact that the valuation at which you are buying. Make no mistake, 2014 May when Modi 1.0 started, and this is first tenure of the Modi started, the Maruti was at 2000. Even from that context, the stock is still a 3.5 timer. Make no mistake, in the sense it's a great story, just that the current slowdown you may get those entry prices you may get probably a bit more better.
Okay, that's the view coming in on the auto pack, but the biggest sectoral loser today is the Nifty Pharma Index, and it's just not about today. The Nifty Pharma Index has been giving you negative returns right from 2016 till now. We've only seen stock prices coming lower actually. Jagannathan, do you expect the tide turning for these pharma companies anytime soon? Because today also we had a negative news coming with regard to Aurobindo Pharma. Pricing pressures continue, and even the growth in the domestic market seems to be lagging.
I think pharma will be in a very uncomfortable position till the time of US elections November 2020. Make no mistake, in US for the middle class there, the healthcare and pharma assume extremely high importance because of the very, very expensive healthcare facilities they have. I'm sure Donald Trump, to play to his gallery and to play to his cadre of voters, I'm sure he'll put pressure on the pharma industry across the world. India will definitely be in the front line of fire. So keeping that into account, difficult to expect pharma to rally anywhere before November 2020 US elections. I think that hangover will remain. But having said that, as of now, it is clearly beaten down and at a contrarian trade. But I think if you want to really pay contrarian, there are so many opportunities available in the market. So I'm not sure why one has to be so gung-ho about pharma at this juncture.
Okay, that's the view coming in on the pharma pack. But Jagannathan, let's talk about your individual fundamental picks in this market. And you bullish on something like HDFC Life. Take us through the rationale behind it. What sort of returns do you expect from this company in the next 1 to 2 years?
Insurance, we feel, is a multi-decadal opportunity, and I'm not even talking about 2-3 years. I'm talking about a good 20-year kind of thing. And add these insurance companies to your portfolio. The insurance sector at this juncture is exactly where, let's say, banking industry, let's say 20-25 years back. As of now, insurance is highly under-penetrated, and then still it's barely at 2-3% kind of penetration. Long way to go in terms of increasing the unit holders. Meaning thereby, I think we can expect enormous opportunities in the insurance sector. And HDFC Life, SBI Life, and ICICI Pru, 3 listed life insurance companies. Out of that, understandably, HDFC Life has the blessing of FIs and the high-quality investors because of the tag of HDFC. We believe it will continue to enjoy its premium in terms of the valuation. And if you can use the dips to buy, keep accumulating. Don't build the insurance portfolio for you. Build it for your kids. I think it's one of those huge wealth creation opportunity. Don't miss the fun.
Okay, the next one is on RBL Bank, and we've seen some outperformance coming in from a couple of these banking stocks, be it RBL, DCB, and Federal Bank, at least in the recent past, post the Q4 numbers. But why RBL Bank?
RBL Bank, I think the clear outperformance that you have witnessed and that you are referring to came interestingly after the Island FS episode. After the Island FS episode in the last week of August, almost entire banking and NBFC sector was beaten out of shape, whereas RBL Bank was a clear outperformer. And there is a reason, because the total exposure of RBL Bank to Island FS is barely 15 crores, that to cash collateralized instrument. So that means when the Island FS had a 90,000 crores of exposure to the entire banking system, if RBL Bank can able to escape the exposure like Island FS, that speaks volumes about I think at least the underlying diligence standards. One of the reasons that the smart money moved to RBL Bank was that the lack of exposure to Island FS given a great amount of comfort. The stock has already rallied good 40%, almost from 500 rupees to 700 rupees post that Island FS episode. Just now it's taking a bit of cool off, bit of profit taking, and you can use these dips to start accumulating. We feel RBL Bank has great story building up, and I think it is one of those stocks. It makes a lot of sense to be in the portfolio. Just that you should be using the dips to buy.
Okay, let's just finish your fundamental picks. And the last one you have is on L&T. Do you expect any sort of revival with regard to the capex that one has been waiting from the private sector?
For the first 5 years of tenure of Modi government, frankly, L&T has not been a great performer in terms of the stock performance. It has been a great laggard, and then it has frustrated the investors. But having said that, we believe in the second tenure of Modi government, there is a major chance that infrastructure revival may receive huge amount of thrust, and L&T will be a clear torchbearer or a clear leader in terms of to take advantage. So, and also after many years, I think first time management has spoken in the shareholder-friendly tone when they referred about buyback about 6-7 months back. That's a different matter that somehow it couldn't get the clearance from SEBI, but we believe at least that shareholder friendly tone has come back. We believe the dips can be used to buy. It is available at very inexpensive valuations. We feel upsides are there, and it's a clear proxy on the infrastructure theme, and about 3 lakh crores of order book in hand is giving enough comfort for the revenue visibility for the next 3 years, and it's making of a good wealth creator in the second tenure of Modi government.
Okay. Jagannathan, one final question, and that is on the two stocks which have looked slightly weak the last number of days. Would you fundamentally believe any of them are worth a buy? One of them is a Yes Bank, the other one is Indiabulls Housing Finance.
I think a very difficult question at this stage because of the amount of news flow that is going around. I think markets are at a stage where highly bipolar market, where the companies and the managements where market believes have a good track record and reliable managements. The market is giving 5 price to book, 6 price to book kind of multiples, and wherever market is slightly uncomfortable and market is even started trading at sub book values. Very bipolar market, very difficult to understand beyond a point. But at this till the time I think S Bank able to raise its funds, the $1.2 billion fundraising that they referred to, market will be keenly watching at what price they will raise, and I think that will set the tone for the revival of S Bank. I think the takeoff point for the S Bank is nothing else. It's all about the fundraising, whether they will able to raise, and if they will able to raise at what price. I think that is the moot point that investors have to keep a watch on.
Okay, Jagannathan, we'll leave it at that. Thanks much for taking the time out and being with us today. Appreciate it.
Thank you.
That's from Jagannathan Thunagundala. Some stocks that you can buy for your grandkids. Well, look at those as well. Let's try and figure out what people can buy for themselves as a trade. We spoke about bullishness on the index. Manav, I want to ask you about Indiabulls Housing or Yes Bank. Difficult ones. One which is relatively easier is IndusInd Bank. Yes. How does that look on the charts for somebody who doesn't have a position? Is it worth entering?
See, I would only recommend trading position in IndusInd Bank for a simple reason that the structure of this stock has been deteriorated in past few months, and it has an important structural support at 1350 to 1400 on the lower side, and we have seen a strong active buying coming at those levels, and the oscillators are a deep oversold zone. I expect a mean reversion into this stock as long as 1400 supports are held. There is a possibility of at least 7 to 8% short-term momentum rally on the upside. 1600 could be the maximum upside target that we can look into this, but beyond that, the stock faces series of resistance. So I expect a broader trading band into the stock of 1400 on the lower side to 1600 on the upside.
Okay. The other is the weakness that we've seen in Maruti, and I think today the volumes would be higher. If we can bring up Maruti first and then show the AVAT function of on the Bloomberg terminal to just show you the volumes. I don't quite know, but I reckon that maybe, just maybe, today the stock would have fallen with a fair degree of volumes. Yes, so the 20-day average volumes, which is the blue line, has anyways gone up, but the white line is the one that we are pointing towards, which is the volumes today, and substantially higher than the 20-day averages. So the stock has fallen, and fallen on good price and volume activity in the session today. Kshitij, what do the charts of Maruti Suzuki indicate?
See, looking at the chart structure of any of the auto stocks, no other stock is looking much more promising to me for a buy call. But yes, if I look at the charts of Maruti, first of all, on a daily and the weekly, both parameters, the stock has been maintaining its downtrend ever since it has broken, the psychological level of 8,000 a long time back. But since then, we have seen kind of a pullbacks onto the charts, but neither of them have been sustained at the higher levels. And on a current juncture, on a shorter time frame, I believe the 200 days exponential moving average on weekly charts, which was placed around 65 50 levels, that has been breached in today's session as well. And we have seen addition of open interest of nearly 4% with a fall in price of more than 3% in today's session. So I believe the bears will likely to keep control onto the script, and on a downside, if any time it breaches 6350 levels, the more downside possibility towards 6200 levels cannot be ruled out.
Okay. I was trying to think, Navneet, as to if technically it is looking so strong to our experts, and if the index has to move to 12,800, what can carry there? It's difficult to fathom the HDFC twins moving up dramatically from where they are right now. They didn't fall as much from these whatever levels. Reliance is under if they do some stake sales or whatever, an IPO, yes, but otherwise, Reliance needs to perform dramatically well for the index to do well, and maybe some support from IT, because that index, in connection to what the index Nifty has done, has maybe corrected a bit. So, if it has to be a 500-600 point gain on the Nifty, the Reliance and IT have to participate.
So far the rally has been polarized, but that's a very interesting point about IT. Whenever there was any sort of correction coming in from Nifty, I think there was some support coming in from Nifty IT. A lot of these IT stocks had been very resilient to the sell-off, in fact, what we've seen in the recent past. But rightly mentioned, the rally has been polarized, but if one were to expect index inching higher by another 500 points, which are the stocks, one would still think about Reliance, HDFC Twins.
But HDFC Twins have rallied, so I'm just thinking fundamentally, can they move up further, or would it be Reliance IT and would it be
Reliance,
autos coming
I'm
back?
not too sure because of late the brokerage reports, I think the recent one which came in from JP Morgan, they have shown some sort of skepticism when it comes to their cash cow business. That's the refining and the petchem business. They do not expect this particular side of the business to reap more benefits what they've been doing in the recent past. And I think I was just reading one article in Times of India which highlighted right now it's all about InvITs where they're looking to divest and raise money. The other one is they may just look to list Reliance Jio next year, but that's too far-fetched right now. Whether they would look to unlock the value of their telecom business. Remember, that's the only company, I think, in the last 2 quarters which have reported some sort of profits when it comes to the telecom business. But ARPUs in the last few quarters have been declining for this one.
Yeah, that too. Well, maybe they need, well, if they raise rates, then that's something that
And
could
not to
work
forget
beautifully
the
for-
debt which they are sitting on. I think that's the major overhang now going ahead for Reliance Industries.
Yeah, known devils. What if they come out with something on the rates? And that could be something very, very interesting. Okay, before we take that break, we'll get in, of course, Shefali Malik to talk about what Ujjivan and Equitas are up to because those stocks have been under a bit of cloud as well. But just wondering, one final question before this break. Reliance Industries, Manav?
Yes, looking at the chart of Reliance Industries, it has overall been consolidating since past few months. We have seen more of a time correction than a price correction. Structurally, the stock is still positive. The important support that we are looking into the stock is 1240 to 1250 is the support band, and which also coincides with some of its long-term averages. I sense in the near-term perspective, if this support is held, we could see a rally coming on the upside. The key breakout point for the Reliance on the upside would be at 1320 levels. So if there is a weekly closing in Reliance above 1320, that is the only initial triggers that could take this stock to the all-time highs and would also support the Nifty index. So at the current zone, I think any traders for a momentum play should look at the 1320 levels for this stock to enter long positions.
Okay, watch out for Reliance Industries as well. But I think what we need to watch out for today is what's happening to Ujjivan and Equitas. So both of them have slipped more than 4% apiece in trade. Both the companies, 6.5% for Ujjivan. And both the companies are supposed to hold a meeting with the Reserve Bank of India over the listing of the small finance banks. Shefali Malik is, gone through the norms and the uncertainty surrounding the two stocks and joins us right now to tell us what could possibly be weighing in on these companies. Shefali.
Well, this meeting was supposed to happen anytime in June, but it has not happened. We don't have any update. I tried to get in touch with the management, but haven't been able to get through them. So what was supposed to happen was the meeting was supposed to happen. Ujjivan last time told me that they had already made their presentation with regards to the listing norms. They wanted RBI to dilute some of those listing norms. Remember, as per the RBI regulations, Ujjivan Small Finance Bank will have to be listed by Jan 31 to 2020 and Equitas Small Finance Bank will have to be listed by September 4. So for Equitas, it's just about 2 months left to go for the listing. And a couple of days back, there was a report suggesting that RBI is not in a mood to budge. However, Ujjivan management told me towards the end of May that there is no fresh development and the meeting will happen in which they've already made a presentation. They will further discuss it regarding this listing. And it's not just the listing of the small finance bank, it's also about the promoter shareholding. So as per the regulations, Ujjivan will have to maintain promoter shareholding of at least 40% till Jan 31, 2022 and Equitas will have to maintain the same till about September 4, 2021. So it's a combination of both. In the near terms, it's about the listing of the small finance bank and the issue of the holding company discount is coming in and hence the pressure on the stock prices. So we'll keep an eye on this meeting when it happens and what update comes out of it. However, going by how the RBI's mood has been with regards to the regulations, not just regarding the small finance bank, but with regarding some of the biggest institutions as well, it has been pretty hard in terms of its regulations. You see Kotak Mahindra or other entities. So going by that, it doesn't look like that RBI will dilute the shareholding norms, the listing norms for these banks. So that might keep them under pressure. However, just a few days back, UBS put out a note and they were pretty bullish on these small finance banks. In fact, a couple of other brokerages as well have been bullish on small finance bank purely on their business outlook. But this particular regulatory aspect may weigh down on the prices.
Yeah, well, certainly looking like creating a bit of a flutter today without complete knowledge of what's happened. Shefali, thanks so much for bringing us those details. So you got to keep this in mind when you're looking at Ujjivan and Equitas. Stocks have looked slightly wobbly. Let's see what they do. Kshitij, very quickly, a quick 30-second answer. Ujjivan, Equitas, do any of them look good enough for a trade?
See, if looking at a trade for short-term trade, I believe Ujjivan is a much bearish structure is building up into the stock. The stock has broken down its recent support levels, which was placed around 300 levels, and from last 2 trading sessions, we have seen short build up into the prices. If I talk about today's trading session, the stock has already added up a open interest of nearly 30% with a fall in price of nearly 6%. So one can take a short position in Ujjivan at current market price. Keep a stop loss just below 307 odd levels from here on, for a downside potential of 285 to 283 levels by next trading session.
Stay on, gentlemen. So much more to talk about. Time for a short break here on Countdown. On the other side, we get you the Fab 4 stocks of the day. At 3:15, we get you what dealing rooms are recommending, and then some closing strategies.
Welcome back. You're still watching Countdown with us. Half an hour to go for markets to close. Nifty is currently at about 11,765. So some recovery definitely seen from the lows of the day. Let's just pull up Bank Nifty as well. I think there's a sharper recovery coming up for Bank Nifty, which is at 30,725. So down only about 55 points. Remember, yesterday also Bank Nifty outperformed. There were a lot of long positions which came in on the Bank Nifty futures. Pull up the market breadth. Let's check if that's improved in the last half an hour or so. It's just even Steven right now for the broader markets as well. And pull up the European market indices. Let's see what they're doing currently. Last when I checked, they were off to a positive start and they are still trading in the positive territory. We've got the FTSE, CAC and DAX, all of them sitting with some amount of gains. And the Dow futures, yesterday S&P 500 closed at record high levels. Dow futures is just indicating a flat to negative start, at least for the US markets. Okay, let's check which are the Fab 4 stocks then, which feature in Mishika Parik's list today. Hi Mishika, good afternoon. Which are the stocks that you're tracking?
Hi, Navneet. The first stock on our list of Fab 4 today is Lakshmi Vilas Bank. The stock hits 10% upper circuit as Competition Commission of India approves merger with Indiabulls Housing Finance. Now, as per the merger, the shareholders of the bank will get 14 shares of IHFL for every 100 shares held. The second stock on our list of Fab 4 today is Suzlon Energy, which is up almost 5% on the news that bankers meet today to resolve their $1.4 billion debt. The firm plans to offer a one-time settlement to the lenders led by SBI, as reported by Bloomberg. Stock number 3 is HEG, which has gone up almost 7%. The stock snaps out of its 7-day losing streak with volumes 3 times its 20-day average. And the last stock on our list of Fab 4 is MRPL, which is up 3%. Fresh longs were seen with high open interest of 18.18%. Back to you, Navneet.
Okay, Mishika, thanks a lot for bringing those Fab 4 stocks of the day. And MRPL is the one actually which has been strong throughout the session despite of markets turning weak. And talking about the markets, I think in the last 5 minutes, once again, there is some selling pressure which has come by. MRPL, however, is sitting with gains of about 3%. Look at that sharp fall. We just addressed the markets, and from those levels, I think that's another fall of about 30 to 40 points. Very quickly, Manav, if I could come to you, a call on MRPL?
Yes, in fact, the prices have seen a series of decline recently in MRPL and are bouncing from its deep oversold levels. The structure of the stock still remain weak, so I don't recommend any bottom fishing into this stock. But for a short-term trading opportunity, yes, the stock could see a mean reversion towards its long-term averages. On the upside, 66 to 68 could be a possible targets, and anybody who's trading into this should definitely trade with strict stop losses. And for a medium-term, long-term perspective, I still see the structure is still weak. But for a short-term trading opportunity, the stock could see a near-term rally towards 68 levels on the upside.
Well, let's get in Deepak Shinoy of Capital Mind. He joins us right now on the show with his thoughts. Deepak, good having you. Thanks much for joining in. Deepak, what's the sense, or what's the gut feel, if not a fundamental analytical feel, that you might be having currently about what the markets could do over the near term? There is this big budget event which might turn out to be nothing for the Dalal Street per se. Where do you believe the markets could be?
Yeah, so firstly, thanks Neeraj for having me on your show. I think the markets have been lackluster last few weeks. I guess there was a lot of enthusiasm after election results, and then kind of petered out. But there is a lot of fear currently from two sources. First one is known NBFC and the damage that's been happening in the markets because of debt defaults has not entirely gone away. I expect a few more downgrades to happen towards the later half of, it's already the later half of this month, but and the early parts of July. That will probably add another challenge to the mix. However, these are good things because in general it weeds out the weaker players. It will give us an indication of who the stronger ones are. At the same time, the second challenge now I think which is coming up is what happened with the NSE circular yesterday, and I'll expand on that perhaps more in a post later. But there is some consternation about how it will impact markets because of the way brokers have abused, some brokers have abused or misbehaved with the system in the past, where they have used client securities as margin against their own borrowing in order to provide for margin funding or for other activities. And that has been clamped down pretty hard by this NSE circular, which will result in some unwinding and some changes in the next 1.5 months. So I expect that to play out as the circular's impact gets absorbed by the market. I personally feel it's a good thing, but it will have an impact. So in the short term, these are the impacts. The budget, I don't know. I don't think it's going to be a blockbuster budget because it's already halfway into the year. But I believe we'll set up positions for a good budget in February next. I don't expect any new taxes. I do expect some move on infra. So there are those stocks I think which should do well, both from a say electricity transmission, railways, or in pure infrastructure roads perspective. What I'm looking forward to is deals, specifically foreign pension players or foreign funds looking to buy distressed Indian assets. I think that's a signal that we will finally be looking at a turnaround.
Deepak, what do you expect, out of any kind of policy action? Today there's the GST Council meet. I doubt that anything can be done on autos, but anything that you expect or any one move in the budget that could be beneficial for a particular sector, segment, or the markets at large?
So, I think right now we're going to get the benefit of lower interest rates. The government is also going to get the benefit of a RBI dividend, a special dividend of some sort, whenever that comes. So there will be some headroom from a fiscal perspective. The banks may need some capitalization, but not all of it will be needed. So I expect some government spending to come through. I don't know of what kind, but there will be some extra government spending that should come through. It may not entirely affect retail. It doesn't make sense because if you've already done tax planning for this year, it doesn't make sense to introduce a whole host of tax advantages or disadvantages at this point. However, it has been done in the past. I think the last time they introduced these capital gains taxes on debt mutual funds, which was introduced in July. So that can hurt the mix. But policy-wise, I think I'm looking forward to seeing a bigger direction on a few things. We've talked a lot about some of the things in the last government itself, like water-based shipping or water-based carriage infrastructure, which we have not really done anything about. We've talked about more airports, perhaps. We've talked about a lot of the road infrastructure getting monetized in a different way. That I think these are important things for the government to talk to us about. And I hope, and this is a hope that I've had for a long time, that the government looks to finally remove us from the shackles of FEMA and make the rupee fully convertible. I don't know if it's going to happen now, but I hope at least some road or some path on that will come through. Let's see. It's just early days. I don't want to predict policy because it's better to react to it.
Okay, Deepak, stay on with us. While the GST Council meet is underway in New Delhi, the GST exemption in low-cost housing is likely to be fixed in today's GST Council meet, says T.S. Singhdeo, Minister from Chhattisgarh. Speaking to reporters in Delhi, he lists out the agenda.
The agenda is regarding the minutes of the last meeting, confirmation of the decisions. I suppose it would be concerning the real estate. That would be one of the agenda. Then the issue which has been continuing is the lottery ticket issue, the issue between Kerala and Assam. So that will probably come up again today. No issues really relating to Chhattisgarh specifically. I think they would be discussing making Aadhaar linking mandatory for new registrations in GST. That might come up for discussion. It is the composition element which was introduced in the last minute. So they'll be fixing exemptions up to, let us say, maybe 40 or 50 lakhs or whatever exemption they'll fix for smaller city low-cost housing. Okay. So the idea was to keep low-cost housing outside the limit of GST taxation. And to rationalize taxation, it will be a composite tax rather than on individual items. So that would probably be 5%, 6%. If you add a taxation slab on low-cost housing, then where in low-cost housing earlier, the offset was being provided to the builders, it was not being passed on to the purchaser. Now, if you put in a slab for the low-cost housing also, then the low-cost housing purchaser will have to pay, let us say, 5% GST, whatever component of 5%. If it is 40 lakhs, so 5% will be 5 for the 22 lakh of rupees. If you impose a GST, a consolidated GST regime, if you impose, then the low-cost housing person who is exempted today because he is not charged GST by the builder because he gets offsets. So we had opposed that, and I am happy that they had accepted that. For low-cost housing, they had fixed a limit for cities up to a point, which could be 40 or 50 lakhs, 30 lakhs, you'll get it after the meeting. So they would be exempted. In any case, they were not being charged. So, and the taxes for housing above that particular limit, they would be charged on a consolidated amount.
Okay, the markets are almost at the low point of the day. Yesterday we gained about 140 points and we've already shaved off 110 points out of that. And Bank Nifty is also down 165 points. Just want to highlight a few stocks which are still going strong. ICICI Prudential has seen strength throughout the day today, so that's still sitting with some amount of gains. I think even ICICI Lombard was up and about. Besides HDFC, AMC is the other one. All of these stocks are seeing some. ICICI Lombard has, by the way, slipped into the red just in the last few minutes of trade. AMC is up about 2%. And the other one I wanted to highlight was United Spirits, which was up about 4 to 5% in yesterday's trade. I think there was some buying seen even in today's session. That seems to have come off the high point of the day, considering the markets have corrected. But still, United Spirits is sitting with gains of about nearly 2%. Just one stock I want to highlight, put up Jet Airways. It came out of the F&O ban for today's session, and the volatile moves that one had seen in yesterday's trade. Right now, the stock's up about 18 to 19%. It may likely once again enter into the F&O ban period for Monday's session. Looking at the activity in today's trade, it looks like the total open interest could exceed the 95% mark of market-wide position limit, which is required for a stock to enter into the F&O ban. As of yesterday, because it fell below the 80% mark, it was 76%, and that was the reason why it came out. But there is activity which is seen on both the futures as well as the option side, and whoever is taking position into this stock, 27th June is the last day that you can trade because it comes out of the derivatives market, Neeraj.
Yeah, well, so watch out for this. Watch out for the other two that have been under the F&O ban today, or entered into the F&O ban yesterday. Reliance Capital, Reliance Infra. Maybe Infra was already in the ban and Capital re-entered the F&O ban. It's amazing that we haven't spoken about those two stocks at all in the last 1 hour, 10-15 minutes. But flattish moves for both the ADAG group stocks, at least the ones which are not single digits. It's time to take a look at what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Yatin, let's start off with you first.
Neeraj, UPL, that stock was quite volatile yesterday. Today has managed to recover, almost 2%. Dealers do expect further short covering. Today, there was short covering. It has come off significantly from the day's high, but dealers do believe that the short covering here will continue for the next 1 or 2 trading sessions. They're expecting some bit of uptrend because of that short covering. Another one is Yes Bank, and have seen continuous amount of selling and supply coming in there. Dealers do indicate that domestic funds are sellers as far as Yes Bank is concerned for trade today. 4% down for that one. Volumes also looking good, over 1 crore shares traded. And Ujjivan Financial, this is the top F&O loser in trade today. Neeraj, and both Equitas and Ujjivan have seen some selling pressure. The fear in the market is that once the small finance banks list or probably get demerged, there could be some holding company discount which can be applied to all of these. So some selling ahead of those events moving ahead, because in a period of 3 years from the issue of license, these small banks were to list separately according to RBI regulations. So let's see how really does the entire transaction shape up. Dealers are recommending sell today, buy tomorrow kind of strategy as far as the F&O trends are concerned. But Darshan has a few more stocks to talk.
Yeah, so one stock which has been spoken about today is Jubilant Foodworks, is down 2% in trade. Dealers indicate that some of the domestic funds have been sellers in the counter, so that's something that's been watched about. The other counter in which there is selling pressure that's coming in, and that is RBL Bank, again trading down by 2%. Some of the HNIs are active sellers in the counter. And finally, the metal pack is something that dealers like at this point of time. Tata Steel is flat in today's trade, but nevertheless, a large foreign brokerage is actively recommending this stock to its client.
Well, let's wait and watch. The last, Darshan, Yatin, thanks so much for putting that dealer expectations into perspective. Deepak, what did you make of what's happening in Jet Airways the last 2 days? I'm sure you have some thoughts here.
Sorry, I lost the question there. Could you repeat that?
Jet Airways, Deepak. What have you made of what's happening in Jet Airways the last 2 days?
Okay, I'll be frank on this. I think that stock is going to zero. There is going to be no rescue of any sort, and I really think everybody should just avoid this counter. If you have it, sell it. You're going to get 70 rupees more than it's worth. There is no activity. The airline has not been running for a month or 2 months. Is degrading value on an exponential basis on a daily basis, on every day. You're losing the brand. Even I was almost laughing at a mail that came in with jet privilege points. I know they probably still have value, but you can't use it on the airline that was created to have delivered those points in the first place. But I don't think there's going to be any value left here. I don't think there's going to be any buyer. So I think enjoy the next few days because the F&O players are having fun. That's the last we'll see of that stock, I think. It's just a sad thing, but as a warning, I think don't play here. This is just, this is speculative waters at an extreme degree.
Well, Deepak, fun and games will actually come to an end on June 27th. And in fact, not only on the F&O side, remember, for the cash also starting June 28th, Jet Airways will be entering from the rolling settlement to trade for trade, which actually means that you'll have to compulsorily take the delivery in case if you're buying the stock in any intraday session. Right now, of course, you can buy, sell on the same day for Jet Airways. The price band then will be 5%, so you cannot witness the wild moves that we saw in yesterday's trade and also today when the stock is up about 17 to 18%. Deepak, wanted your thoughts on HDFC AMC. I think recently Capital Mind did a webinar stating the Z horror show featuring HDFC AMC. What did you make of the news that the mutual fund is looking to buy NCD worth about 500 crore of SL Group?
So this is, interesting for us because the AMC is taking the risk on its own books, but only for a specific set of customers, which is the people whose FMPs have matured. And I think they are doing this because they got show cause notices from SEBI suggesting that they explain their action they took on the FMPs. To give readers, to give viewers a background, the idea was that these FMPs were maturing on a certain date. There was an NAV and that NAV was not fully honored to the extent of the debt that those FMPs had, which is owned by the Z Promoters group. So that is the SL group and Subhash Chandra group. And because they weren't able to fulfill the full part of the NAV, HDFC tried to roll over the FMPs for another year, which successfully went through, but again violated a ton of SEBI regulations in all possibilities. This is why the show cause notices come. So the issue now is they have taken this problem debt in their own books. They said they will value it at the valuation at the time those FMPs matured, which if it was April was about the par value. If it is May, I think it's 10% below the par value because there was a downgrade of these particular securities in May 23rd to be precise. And we believe that there is potentially more room for another downgrade of these particular bonds because according to the rating agency, there is a requirement that 6 weeks after May 8th, the Subhash Chandra Group should have announced their sale of their stake or partially exit of their stake in Z Enterprises and Dish TV to be able to pay for the debt on the SL Group, promoter group company. So it hasn't happened so far. This is exactly 6 weeks. In a couple of weeks, it will be 8. And I believe that if there is no news of any sort from the Z stable, there will be another downgrade and the hit will be passed. This will then hit other bonds that are owned by HDFC and other mutual funds as well. So the horror show is really that it's like a sliding thing that's happening, a train wreck in slow motion. If the companies have decided, the mutual fund companies decided to keep the shares and not sell them in order to recover their money, they could have sold them. Reliance did so. And the action they're taking is because of the fact that they took that decision and did not sell those Z shares in order to recover their money. They could have done that. And therefore, they're taking the risk away from certain shareholders. This can hit HDFC AMC's balance sheet, wiping out about maybe a quarter of profit if there was a default and they are able to only sell the shares for at a deep discount. But I believe in the interest of the long-term interest of the AMC, it probably was the right thing to do because they took the decision not to sell the shares, and they are going to, the shareholders of the HDFC AMC are going to have to bear the brunt of that decision.
Okay, I just want to pull up Hexaware. There's a big move which has come in the last 5 minutes of trade. In fact, this was the stock which was holding about also throughout the session. It is an outperformer for the week, but the big buying has actually come up in the last 5 minutes of trade. It's sitting with gains of about 9%. We'll get your technical thoughts on that, but just 10 minutes to go for markets to close. So let's get some closing ideas going from our technical experts. Kshitij, if I could come to you first, any BTST or any STBT for Monday's trade?
Yeah, definitely. Like markets are basically witnessing a wild swings, but in coming week, I believe once again bulls can take control over the markets, and in next week, I believe the cement stocks can see some kind of value buying coming into the from technical parameters. So the stock is coming onto the radar is Ramco Cement as of now, currently trading around 803, 802 odd levels. I believe the momentum play can be taken as a BTST can be taken into Ramco Cement by keeping a stop loss just below 780 levels. If somebody wants to take a positional trade as well, play for 835 to 840 levels in 1 to 2 trading sessions for Ramco Cement.
Okay, Manav, your closing idea and a thought on Hexaware as well.
Yes, so at the current levels, I like Concor. In fact, this is also a part of the Nifty Infra Index. And the stock has seen a good breakout from its short-term consolidation. For the near-term perspective, yes, the momentum can take it towards 575, but one should not take it for a short-term momentum play, but a broader perspective, it's very well poised to see an upside move of at least 650 going forward. For Hexaware, yes, in fact, the stock was witnessing a good amount of sideways consolidation and the breakout that it has witnessed today. And in fact, since last couple of trading sessions, there was huge amount of volumes. And if you also look at the delivery percentage, volumes were also increasing. It was much high yesterday. And looking at the momentum indicators, I think definitely there is no risk reward for any person to enter at the current zone. But yes, the prices have come out from a big sideways consolidation. Maybe a dip towards the levels of 400, which is the next support zone, is where one can look to consider. But as of now, for trading opportunities, there is no risk reward.
Yeah, well, I can understand that call as well. Just looking at stocks that have had some movements in the last few minutes, I think on the index, probably Tech Mahindra, but at the broader end of the spectrum, aside of course, Hexaware, Adani Transmission has had this big surge. Just bring up that stock, was doing virtually nothing, Adani Transmission, and then a big spike up. Manav, any thoughts here, Adani Transmission?
Yes. See, if you are looking at this chart since last couple of months, in broader perspective, it has been in a tight consolidation zone. We have not seen any kind of momentum into the stock and has not been a trader's pick. In fact, on the lower side, the broader range has been 210 is the support and 250 is the resistance. So at this juncture, we can just expect a rally towards 250, but the stock actually has to see a breakout above 250 levels for any decisive move on the upside. So at the moment, the structure is still positive, but for a momentum play, wait for a breakout on the upside.
Okay, so that's the view on Adani Transmission. There is Gati, there is Aditya Birla Fashion, there is Alchem Labs. Alchem Labs has had a good move too. Marksans Pharma marginally higher in trade. So these 2 or 3 names that you got to monitor in the session today. Deepak Shenoy, one final question to you. Everybody talks about whether or not it's a good time to buy into autos, etc. I'm wondering if you believe that auto ancillaries and not the Motherson Sumi and the Bharat Forge, which have, well, maybe larger issues, global issues, and therefore difficult to fathom that much, but domestic suppliers, is the pain in the price for a Jamna Auto, for a Lumax, for a Minda Corp, etc. Is the pain in the price, or would you wait it out?
So I think selectively many of these players are interesting. As a disclosure, I own some of them, and I believe that if you look at a 5-year perspective, that these prices are actually pretty good to buy most of these companies. However, it's not going to recover in the next 2 or 3 months. Probably it'll take, even after the big Ashok Leylands and the M&Ms recover, it will still take some more time for the ancillary prices to recover. So if you're in here, you've got to be thinking 2022, 2023 as an exit point for these stocks or more. So that is the thinking, because at this point, there's a lot of challenges in the CV space. There's a lot of challenges in the personal car space. We're seeing stoppages of production, and therefore a slight. And every time any of these things happen, they will constrain. They will constrain supply today. And when demand comes back, that demand will take some time before some of these things come back into action. So the issue will be the recovery will probably still take 6 to 8 months. I thought it should be over by now, but I think in the longer term, we will see great participation by these companies. Their margins may not improve substantially, but I think their cash flow will, and their debt servicing cycles will improve dramatically in the next 24 months, both from lower interest rates and from a recovery first at the OEM end, which is the manufacturer itself, and secondly at from the replacement markets. So Jamna is one of the players there. I think some of the others also have lights, have wires, and a bunch of other things that are for the domestic market. This will take some time, but I don't see demand dropping off. I don't think India is stopping buying cars or trucks anytime soon. We are not anywhere close to saturation levels, so I'm still in for the long term. My bias perhaps because these stocks haven't done well at all, but that's what I think.
Okay, Deepak, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the markets. Have a good weekend, Matt. Markets are not doing great at all. In fact, index is down 100 points in trade. I just want to quickly take a view on V-Guard, pull up that stock, which is still holding about in green, up about 5% in trade. Manav, any thoughts here?
Yes, in fact, the stock has been in a very good bullish uptrend. In fact, after a good short-term corrective decline from its peak of 250, the stock has decisively closed above its, likely to close above its yesterday's high, which has confirmed a short-term trend reversal, at least on a short-term time frame. And most importantly, the volumes are also above 20-day average volumes, and the oscillators are bouncing from the deep oversold levels. I sense, looking at the overall trend for this stock, there is a high likely chance that the prices would even exceed its recent swing high and probably see a good momentum rally on the upside. The upside target can be placed at 270 for a positional trader, can maintain a stop loss at 230 on the lower side.
Okay, gentlemen, stay on. Let's start wrapping up the markets. And not a good day, but our experts are bullish about the near term. Keep that at the back of your mind. We are ending in and around the lowest point of the day for the benchmark indices. So the Nifty Bank has, well, done slightly better in the last 45 minutes, marginally at that. Mid caps and small caps, the tables turned at around 2 o'clock and the market was worsened, but I don't think there is a dramatic impact on the Nifty Bank either. Let me talk about the large caps first though, and let's see what's moved and what's not. So some gains to a UPL after yesterday's carnage, up about a couple of percentage points. Some gains for Hindalco, Indiabulls Housing Finance, Tech Mahindra, State Bank of India and IndusInd Bank from the banking lot too have done reasonably okay for themselves. What's not done well? Yes Bank. After that 12% up move yesterday, corrects in the session today. HDFC corrects about 2.5% today. Maruti Suzuki 3%. It's been a sore spot throughout the trading day. HUL, Hero MotoCorp, autos have had a slightly tough day. Coal India has corrected a little bit, and down there, Kotak Mahindra Bank down about 1.5%. So yes, Kotak are amongst those banking names that have looked slightly wobbly in the session today. What about the broader end of the spectrum, Naveen? Are you starting with Jet yet again?
No, today is Hexaware, but let me tell you, one of those few days where the broader markets have outperformed the benchmark. So it was a mixed day for broader markets, but the breadth was even. Steven, let me start off with Hexaware, which was, as it is, trading in the positive territory for most of the session, but the last hour saw some aggressive buying coming in. Finally, the stocks looking to close with gains of about 7.5 to 8%. And yes, Jet Airways features in my list once again, the stock which came out of the F&O ban period. Well, towards the closing, I think it's fallen again from those highs. So it was a volatile session again for this counter. 63 to 64 is the level where it would be closing today. TBZ, interestingly, the stock was down 13% on Wednesday. Yesterday also there were some wild moves seen, and once again today the volumes were quite higher for this one. So that was up and about by about 10%. Lakshmi Vilas Bank was locked in upper circuit today, up about 10%. The other one from the banking space, JNK Bank, that too was locked in upper circuit. It saw some buying momentum coming in today's session, 10% higher on the mark of 41 to 42. From the sugar pack, you have Awadh Sugar. That saw 9% gains around the mark of 654 is where the closing for this one will come about. Dewan Housing, after correcting in the last many sessions, has seen some bit of recovery. Yesterday also the stock was up, but today I think it's closing off the day's high, but still with gains of about 4%. On the losing side, Soba, in the morning session there was a bulk deal which took place. There was a bunched up trade basically. After that the stock only saw selling pressure, so that's also closing with cuts of about 7 to 8%. Your small finance banks, Ujjivan and Equitas, also featured among the top F&O losers list. So 7% lower for Ujjivan, Equitas closing with cuts of about 4%. Oracle Financial also fell in today's session. In fact, this one touched its 52-week low mark. And from the pharma pack, you had Aurobindo, which received a warning letter from US FDA for its Srikakulam plant in Andhra Pradesh. So that was down, but I think there was some recovery from the lows. Finally, still closing with cuts of about 4%. And pharma has been a laggard. You also had stocks like Cadila today, which fell. Cadila saw cuts of about 3%. That's closing around the day's low mark. And graphite makers have been under pressure because of price correction and raw material prices inching higher. Today also graphite's closing with cuts about 6%. Kajaria Ceramic was weak throughout the trading session today. One of the top F&O losers, 5.5% cuts coming in. And finally, you also had something like Orient Cement from the broader market, which saw some selling pressure. 103, 104 is where Orient Cement would be closing with cuts of about nearly 6%. So, Neeraj, but we've given up majority of the gains that were seen for Nifty yesterday.
Yes, we have, but let's see, as our experts stated throughout the show, that today may be a day of that consolidation or a pullback, but maybe, just maybe, the next few weeks could look slightly positive. Let's wait and watch. The turnover in the session today should come up on your screen. First day of post yesterday's series, and well, cash market turnover certainly very, very high. I don't know if there were some bulk deals that happened today, but 39,000 crores is above average than almost any single day that we've seen in the recent past. Just that the F&O volumes, though you would say that pretty high for a normal day, which is not the F&O expiry day as well.
Yep, it's just above the average of 6 to 6.5, which is the average turnover. But we've been talking about the geopolitical tension in the Middle East, and India Volatility Index, I think since the morning session saw some bit of spike coming by, and India VIX, I think, finally closing with gains of about 4 to 4.5% in today's trade.
Yeah, just bring up the mid caps and the small cap indices and quickly highlight for the week. The weekly performance, that is what I'm trying to say, is let's just bring up what the weekly performance for all the indices have been, because it shows what the gains and the losses have been. The losers include some ADAG group stocks, but HEG and Graphite, interestingly, top the list of losers. And then you have a Reliance Capital down about 11%. Some losses to Dilip Buildcon. Spark features in the list. Reliance Infra features in the list. So, well, not surprised, just that ADAG or the Indiabulls group stocks are not at the bottom of the pile, which is pretty interesting.
Yep, the sort of short covering they saw in yesterday's trade. On the gaining side, Hexaware, majority of the move came in today's trade, but it has been an outperformer for the entire week. The stock was moving higher. Oberoi Realty is the other one, which saw gains of about 7 to 8%. Apollo Tyres bounced back. That was up 7%. Remember, some 3% equity change in Apollo Tyres during the week. And Tata Global Beverages was pretty much strong. Chemical maker SRF has been trading around its all-time high levels. And some of the other gainers were Mangalore Refinery and also something like Prestige Estates.
Yeah, the small cap gainers and losers should come up on your screen. Talk about the gainers for a change. Cyient did okay. Avanti Feeds did okay, but no noticeable gainer really. I mean, all the stocks are probably the ones that are not necessarily present in all portfolios. So a fairly feeble list of gainers at the small cap end of the spectrum, Navneet.
Yeah, and huge carnage, Neeraj, seen for your high beta counters, and Jain Irrigation is one of them. Despite coming out with a clarification that they will be looking to cut their debt by about 2,000 crore, the stock for the week is still down by about 30 to 32%. Jet Airways still for the week is down about 21%, and the other usual suspects, Vakrangi, Reliance Communication, they continue to fall. But you also had IRB Infra, where some news reports indicated that NHAI will be inviting fresh bids for Mumbai-Pune Expressway, and your small finance bank, Ujjivan Financial, was down about 11 to 12%.
But it's quite stunning that despite 2 days, one day a gain of 89% and the other day gain of 18%, Jet Airways has still lost 21% for the week. So that tells you the magnitude of the fall in the preceding 3 days. The final thoughts from our experts. Toshitij, to you first. If you're indeed bullish on the Nifty moving up, will it be supported by the Nifty Bank? What's the call on the Nifty Bank for the next couple of weeks?
Yeah, the question is to me. Okay. Yeah, exactly. At the start of the show, right. At the start of the show, as I have mentioned, that I am not that much bearish onto the Nifty. As far we are holding above 11,650 mark, because from the derivative point as well, 11,700 strike still holds the maximum open interest in puts. So I believe as far we are holding above 11,650, 11,700 on spot levels, I believe the bullish momentum will once again keep up into the market in coming week as well. And rightly mentioned, the banks, some of the banks are looking much more promising to me, which can move the bank Nifty towards say its recent highs. The banks I have already mentioned at the start of the show. ICE is a bank, where SBI. These both stocks are looking much more promising to me. And I want to add disclaimer as well that we have already recommended these stocks as a buy call in yesterday's session to our clients as well. So ICICI, SBI, HDFC Twins, these the derivative data and the technical parameters, all the structure are as of now looking much more positive to me, which can move the markets in coming week to its recent highs.
Okay, Manav, your call has been on the upside when it comes to Nifty, at least for till the month of July. But in the coming week, do you think it's going to be an index-specific week or it's going to be a stock-specific week?
See, I think going forward, at least for the first week, you will see a lot of index stocks would see the initial throttle. And once, if the index manages to break above the important crucial level, then the other basket of stocks would also come into the picture. So for the initial first week, I recommend that SBI and Larsen would be the two large cap stocks one should look in very closely. SBI, after a good 10-year structural breakout, is still maintaining its base of 330 support zone, and we've not seen that stock go below the crucial support. And it has been forming a series of higher bottoms. So that initial leadership has been seen in SBI, and even Larsen has seen a good amount of breakout. And I've been very bullish on the Nifty Infra, so Larsen has in heavyweight. So these two are the heavyweights which I expect for the first week going forward of the July would see that initial leadership, and then the other sectors and stocks would be followed in this.
Okay, watch out for the banking leader and the infrastructure leader. Manav is anyways very bullish on the infra index as well, being the key pillars of the rally that he expects in the month of July. Manav, Kshitij, gentlemen, thank you so much for taking the time out and speaking to us today at Bloomberg Quint. Really appreciate your time. With that, it's a wrap on this edition of Countdown from Navneet, me and the team that put this show together. Thanks so much for watching. But stay tuned, the market wrap comes up next.